Good evening and welcome to CreditSpreadSlayer.com Setup Sunday. Today is December the 1st, 2013. Can you believe it's already December, everybody? It's been a quick, aggressive year for the markets. The SPX is up over 20% for the year, which is monstrous. And what we're trying to figure out tonight is, where do we think it's going the rest of the year? Do we think it's going to finish up another 5% or down another 5% in these last 4 weeks of trading? Well, this is what we're looking at. Right in front of you, you see a chart that you've come to recognize and is very familiar to Credit Spread Slayer. It's our 2-year chart that we have now shrunken and am only looking at the last 6 months and looking at the different rising wedges. As you can see, SPY has actually began trading over the last few weeks in a bullish rising wedge. What this means is that, as you can see, from the retest here, it's now traded up along the support lines and has solid support in about the 180.50 level and has a little bit of resistance in the 182.50 level. So we'd be looking to short anything above 183 as something we feel would need to come back down to earth, and we'd be going long at about the 150 level for year end. Overall, we don't think there's going to be very much movement in the SPY. We don't think we're going to see more than 3% movement in either direction to close out the trading year. Now let's take a look at the VIX to see how that corresponds to our thought process on SPY. Now this chart is a little complex. Let me walk you through it. At the very top is RSI, and right below that is our standard VIX chart, the volatility index, with our Bollinger Bands. The Bollinger Bands are these blue lines on the outside of the candlesticks. Right below that, we do have the SPX chart for comparison purposes, right down here. And all of the red vertical lines are points at which the VIX has touched or traded above their upper Bollinger Band. Now, what this typically means is that the VIX is getting extended. The fear index, everyone's getting scared of a potential extended sell-off, and you would expect a market rally off of that. And at each of the red lines, you can see just that, the beginning of either a small to large market rally, depending on how aggressive that VIX was and that movement above the Bollinger Band. As you can see, our last major one was early October. You can see we traded way above it, up to 21.34, where the Bollinger Band would have been about 20. And we then proceeded to progress from 1650 all the way up to almost 1800 in SPY. It's almost 150 SPY points, or excuse me, 150 SPX points off that extension. Now, as you can see with SPX, we started trading a little bit lower, and we're only talking about 1.5% here, right in this area. And what did it happen? We actually touched the upper Bollinger Band right here on November 19th. And if we follow down and look at that, it led to a small rise in the SPY. Now again, we're at that upper Bollinger Band. The question is going to be, are we going to see a compression in the VIX down lower or an extension before the movement lower? So if we see the extension higher, we'd expect a shock 2% drop in the SPX over the next week to week and a half before setting itself up for a rally through year end and a VIX down in the 12 area, or 1250 area, excuse me. So what all this mean? We could expect to see a shock in VIX in the next, I would say, two to 3 days. We'd be seeing a VIX to the upside, which means we'd want to be selling premium into that VIX rise and taking it off the table as VIX collapses. Make sure you check out tomorrow morning. We're going to be putting on our put sells for the week of December 2nd. And always remember, you can always check in with us with Ask the Expert, or on our YouTube page, or on CreditSpreadSlayer.com, as well as many other social media outlets. Thank you very much for joining us on CreditSpreadSlayer.com's Setup Sunday.